Picture this: the White House, UFC fighters, and the US president's own stablecoin being used to hand out bonus checks. That actually happened yesterday. Stay right there. What is up, everyone? Welcome back to Vishmaster Crypto Daily. I am your host, and today is June 15th, 2026. Massive day in the markets, massive day in politics, and a couple of stories that are going to make you do a double take. Today we are covering Bitcoin pushing towards 66,000 on an Iran peace deal, a yen carry trade bomb that could detonate on Tuesday, ARK Invest dropping $500 million on SpaceX on IPO day, a $2 million exploit on a contract that everyone forgot existed, and yes, we are absolutely spending time on Trump fighters getting paid in Trump coins at the Trump White House. Let's get into it. Alright, UFC Freedom 250, held at the White House. Which alone is a sentence I would not have believed you if you told me 5 years ago. But here's the part that really got traders talking. The fighter bonuses, the performance of the night awards, the extra checks that go to the guys who put on the best fights, those were paid out in $1. That is the stablecoin issued by World Liberty Financial, which is the Trump-linked crypto venture. So you have the sitting US president hosting a UFC event at the People's House, and using that platform to literally pay athletes in a coin that his own family's project issues. The conflict of interest arguments are going to right themselves, and they already are on crypto Twitter. But here is the trader's angle. $1 is a stablecoin. It is pegged to the dollar, so the fighters are not getting wrecked on volatility. What this does, though, is give World Liberty Financial an enormous amount of earned media and legitimacy. Every sports outlet covering the bonuses is now mentioning $1 by name. That is brand building at a scale no marketing budget can buy. Watch for stablecoin regulation conversations to heat up around this, because when a president's financial project is being used for government-adjacent payouts, you better believe Congress is going to have opinions. Keep $1 on your radar, not as a trade, but as a political and regulatory signal. Now, let's talk about why Bitcoin has been moving. As of right now, Bitcoin is knocking on the door of $66,000, hitting a 2-week high, and the catalyst is geopolitical. President Trump announced that the United States and Iran have struck a deal for what he called a toll-free opening of the Strait of Hormuz. For anyone who needs a quick geography refresher, the Strait of Hormuz is the narrow waterway through which roughly 20% of the world's oil supply passes. When that strait is threatened, oil spikes, inflation expectations spike, and risk assets get crushed. When it is secured, you get the opposite trade. Markets read a Hormuz deal as lower oil prices, lower inflation pressure, and a broader risk-on environment. Bitcoin loves risk-on. The move to 66,000 makes complete sense. But here is where I pump the brakes slightly. We also have a separate CoinDesk headline in today's feed saying Bitcoin is not fully out of danger as Trump warns of further Iran strikes. So the deal is apparently not done. There is still a thread of tension there, which means this rally has a ceiling until we get genuine confirmation that the situation is resolved. Trade the headlines carefully here. The 66,000 level is going to be sticky, and a reversal on any Iran news could flush it fast. Now here's the story that I think is getting underplayed today, and it matters the most to your portfolio heading into this week. The Bank of Japan meets Tuesday for a rate decision, and yen short positions just hit a 9-year high. Let me explain why this should be on every crypto trader's screen. For years, professional traders have been running what is called a yen carry trade. You borrow in yen because interest rates in Japan are near zero. You convert those borrowed yen into dollars, and you put those dollars into higher-yielding assets. Stocks, crypto, treasuries, all of it. The trade works as long as the yen stays weak or stable. But right now, speculative short positions against the yen, bets that the yen keeps falling, are at levels we have not seen in nearly a decade. That is a massive crowded trade. And when a crowded trade unwinds, it unwinds violently. If the BOJ signals more aggressive rate hikes on Tuesday, the yen strengthens, the short squeeze begins, and traders who borrowed in yen have to sell whatever they can to cover. Bitcoin is a liquid asset. It gets sold. We saw a version of this in August of 2024, and it was not pretty. Our Vishmaster trading bots actually flagged yen volatility as a risk-off signal in their macro overlay last Tuesday and trimmed net long exposure by about 12% across the fleet before the weekend. That kind of proactive hedging matters in setups like this one. Watch the BOJ announcement Tuesday morning Tokyo time. If they surprise hawkish, get ready for a fast move lower that has nothing to do with crypto fundamentals. Let's talk about ARK Invest for a second because Cathy Wood just made a move that raised eyebrows across the market. ARK bought more than $500 million worth of SpaceX shares on IPO day. Now ARK is of course the same firm that has been one of the loudest Bitcoin bulls on the street, with a price target of $1 million per Bitcoin by 2030. The SpaceX purchase was almost certainly funded by selling other positions, according to the data analysts who looked at the flows. So the question the market is asking is, what did they sell to free up $500 million? We do not have full confirmation yet, but this is worth monitoring. ARK's portfolio moves create ripple effects across growth assets. If they were trimming any Bitcoin ETF positions or crypto-adjacent holdings to fund the SpaceX buy, that is a signal about where they see near-term relative value. It does not shake the long-term thesis, but it is a piece of the mosaic. Quick one before we get to the exploit. The CFTC just sued the state of New Mexico over prediction market jurisdiction. New Mexico is now the 8th state to get hit with one of these lawsuits. This is the ongoing battle over whether platforms like CalSure and Polymarket can legally offer contracts on things like sports events. The interesting wrinkle here is that Gary Gensler himself expressed doubts about whether the CFTC even has the authority to regulate sports-based prediction contracts. When the regulator's own former chief is questioning the regulator's legal standing, that tells you this fight is far from over. For prediction market participants, this creates genuine uncertainty, but also potential upside if the courts ultimately side with the platforms. And finally, a reminder that in crypto, deprecated does not mean deleted. Aztec Connect, the privacy protocol that officially shut down back in March 2023, still had over $2 million sitting in its immutable smart contract. An attacker figured that out and just drained it. $2.1 million gone. The protocol is abandoned. There is no team coming to help. The money is simply gone. The lesson here is brutal and simple. If you ever held funds in a deprecated protocol, go check right now. Immutable contracts do not disappear just because the project does. This is going to become a more common attack vector as more of the 2021 and 2022 era protocols wind down and leave forgotten funds behind. Alright, that is your June 15th briefing. BOJ on Tuesday is the macro event that ties everything together this week. Iran headlines remain a live risk, and the Trump stablecoin story is only going to get louder. If you found this useful, smash that subscribe button. Every notification helps us grow. And head over to Vishmaster.live to see what our bots are doing in real time. I will see you right back here tomorrow. Stay sharp.